Alphabet stock is up over 250%, and it may be on the verge of one of the biggest strategic shifts in years. One that could open a brand new multi-billion-dollar revenue stream and challenge Nvidia right where it dominates, AI chips. Is this momentum just getting started, or is the stock overvalued? So Google is in the talks to offer its AI chips, known as TPUs, directly to Meta and other large companies. Traditionally, Google kept its TPUs mostly in-house, using them in its own cloud data centers and renting out access through Google Cloud. But according to the information, Google is now preparing to sell TPUs for installation inside customers' own private data centers. This is a major shift in its strategy. This is a direct play into the AI chip wars and a direct challenge to Nvidia and AMD. So let's read the article. Google is sharply escalating its bid to rival Nvidia in the AI chip race, and Meta is emerging as the potential multi-billion-dollar customer, the information reported Monday evening. For years, Google has limited its customer tensor processing units, TPUs, to its own cloud data centers, renting them out to companies running large-scale AI workloads. But according to the information, Google is now pitching the chips for deployment inside customers' own data centers, marking a major shift in strategy. One of those customers is Meta Platforms. The parent of Facebook and Instagram is reportedly in discussion to spend billions of dollars to integrate Google's TPUs into its data centers starting 2027, while also planning to rent TPU capacity from Google Cloud as early as next year. Meta, it currently relies primarily on Nvidia's GPUs for its AI infrastructure. If the deal proceeds, it will be a significant validation for Google's hardware ambitions. The company has told prospective clients, ranging from high-frequency trading firms to large financial institutions, that installing TPUs on premises can help them meet stringent security and compliance requirements for sensitive data. The stakes are enormous. Executives inside Google Cloud have suggested that expanding TPU adoption could help the company capture up to 10% of Nvidia's annual revenue, a haul worth billions. 10% of Nvidia's revenue, that is massive, that's big. With demand for AI compute exploding and Nvidia continuing to dominate the supply chain, Google's play to put TPUs directly into customers' facilities signals a more aggressive phase in the AI chip wars. So that's very interesting. And one of the biggest customers is Meta. That's that massive conglomerate, the company behind Facebook and Instagram. So the report suggests that Meta could spend billions of dollars integrating Google's TPUs into its data centers starting 2027. Meta may also rent TPU capacity from Google Cloud as early as next year. Right now, Meta relies on Nvidia GPUs, so this represents a massive change if this does happen. I mean, if we just look at the stock on forecast, the company's been on absolute fire. Look at net income. Net income has gone from 40 billion to 124 billion. So that's up by 3 times the amount in just 4 years. And of course, the price, as you'll tend to notice, price tends to follow net income. Of course, there was a bit of a divergence here for a little bit, but this is when the buying opportunity was. And maybe there's more buying opportunity here. We'll talk about that in a bit. Sales have done a similar thing, just up and up and up for Google or Alphabet, 182 billion to 385 billion. So they've doubled sales, tripled net income. This company's on fire these past 5 years. And also, it's been mainly this past sort of 5 months or whatever it is where we've seen that massive uptick in price. PE ratio, this was the time, real good time to buy was when it was around 18, 17 PE ratio around here. I was making videos about it then too, but yeah, PE ratio has increased to a more normal level right now. It's at 30, so that's like the same as Meta's PE and a lot of those other big companies. Yeah, another thing I like about Google is their shares outstanding, they keep lowering it. So they have less and less shares outstanding. So they're obviously buying back shares. So this gives the current owners of Google a bigger portion of the pie, which I like to see. I really dislike it when the shares outstanding keep increasing, and they keep diluting the shareholder base. You know, it's like if someone keeps putting water into your Coca-Cola, eventually you're just like, okay, I don't even want this Coca-Cola. So I like the shares outstanding data here with Google. Yeah, let's talk about margins and returns quickly. So from the data, gross margins 59%, operating margins 32%, net margin 32%. Margins over 30%, especially at Google scale, are extremely rare. A 32% net margin means Google keeps nearly 1/3 of every dollar it earns after all expenses. That's Apple level efficiency combined with big tech scale, and a nearly 20% free cash flow margin fuels buybacks, AI investments, and infrastructure expansion, all the things that Google has been doing. This is what allows Google to pour billions into the TPUs, the AI, the data centers, without stressing the balance sheet. Google also has a 30.5% return on invested capital. Anything above 15% in these categories is considered excellent. Google is nearly double that across the board. 30% ROIC means Google turns every dollar it invests into 30 cents of annual profit. This is incredibly hard for a company of its size. We're talking about one of the highest quality return profiles in the world. High returns plus high margins equals a business compounder. This is the kind of financial engine that can sustain long-term stock growth even before you factor in the new AI chip strategy. If they can keep compounding and keep growing, the question is, when does it stop? Let's see how they incorporate AI. But with Google stepping into the hardware ring with Nvidia, it's big news. And with Google stock already up more than 250% over 5 years, investors are paying attention. Is now the time to buy? Well, obviously the time to buy was earlier this year, but if you believe that Google will secure major TPU customers and that the AI chip market is just beginning, this could be another turning point. If you think Nvidia will remain untouchable and Google have no chance, you might want to wait.